The crypto markets must bounce today, or they are going to be in big trouble. So we have a whole lot that we're going to have a look at today. You can see from crypto bubbles over here that a lot of the altcoin gains, which I did warn you guys of on Friday, I said that oftentimes these things are liquidity grabs. You can see that they're coughing up their profits and they are starting to sell off quite aggressively coming into the Monday open now, at least for the crypto markets. Futures markets are already showing negative signs and starting to sell off. So I think that this could be one of the most important weeks in markets and crypto that we've had probably in generations. So it's going to be very important. Let's have a look at what's ahead, what lies ahead for the week. And according to TED Talks Macro, he says Monday we have ECB's Lagarde speaks, and then Tuesday we have very interesting. This was not scheduled. Powell speaks on the future of digital assets. Wednesday, Powell speaks on Monpol. Thursday, US final GDP for Q2, and then Friday, US PCE data. And then he said also there's an FOMC member speaking every day this week. So here you have the picture of the Bulls and the Bears. And who's going to win this one? I mean, prices are, at least from a charting perspective, sitting at what would be a support level. But you have to ask yourself, how strong is that support? The trends are down, and that support has been tested multiple times. And I want to show you one very specific thing that I'm seeing in the stock market. They refer to it as the kiss of death. In just a moment's time, I'll bring out that chart and I'll show you how things have reacted historically around that. So looking at, again, move on from that one, the euro. This is very important. Euro is minus 15.3% versus the dollar in year to date. And believe it or not, the ruble is up 22% against the dollar. So that age-old saying of war brings in money, quite interesting. And then you have the GDP, or I mean the Great British Pound, GBP, that is trending at the moment. So we'll touch on that and have a look at that chart as well. The pound is getting absolutely hammered against the dollar. One thing that's also alarming is you have, of course, we know the inverse Kramer indicator. Anything that he says is usually the opposite. This market is not the dot-com crash or the financial crisis. Here's how to play it. So that is not a good sign. Anything that Jim Cramer, I mean, they literally have indexes that do the exact opposite of what he says, and it's been highly profitable. So something alarming as well. I wanted to quickly show this video, but I am just going to retweet it. Go ahead and have a look on my Twitter. Very interesting. It's what inflation really looks like, and it basically is a graphic. You can see it tracks it and shows out. I want to play the whole video now because it's going to take a minute of our time. But have a look at that. Gas and oil is what you should be focused on. Very interesting. This is one of the main drivers of what's going on in the markets at the moment. Okay, moving on to Bitcoin using our Brave New Coin Index, which is an aggregation of all of the different exchanges all put together. And we have it on the logarithmic regression curve. And you can see, of course, not looking good over here. How much time we've spent outside of this this lower band is actually getting quite alarming at the moment. So 10 weeks over there, 8 weeks over here, and now we're on 14 weeks and counting. And more importantly, we've started to close below important areas over here, important horizontal zones. And I have told you guys I'm expecting a capitulation into the zone. And I really do think there's a possibility that could play out over the course of this week. We are nearing a bottom. I must say we are nearing a bottom. The sentiment is becoming extremely negative out there. And usually when that starts to happen, you are very close. When the main majority of crowds start to catch on to the bearish narrative, it's usually near the end of that. So hopefully we can bounce out of these zones sometime soon. Looking at Bitcoin on the weekly chart over here. So we have now changed our whole weekly range. It's got much tighter over here. We can readjust all of this. That's now the new weekly high over there. Let's just quickly move this up. And I would expect continuation. We can delete this one over there. It's going to be a very tight range. And the weekly range low is coming in all the way at the bottom over there at 18,000. Now, what's important about this chart, the most important thing over here is have a look at how this weekly candle closed. You now officially have the lowest weekly close of 2022. So the lowest weekly close of the year. Not only that, but prices also closed below all the important EMAs. You have the 21 and the 200. Very alarming. This 200 EMA has now started to curl over. If the 200 MA starts to curl over, that for a long-term perspective on Bitcoin and crypto, that would be extremely negative. Price below 255 MA. How much longer can we hold under these levels before an ultimate capitulation comes into place? I have told you guys that use Bitget. If you don't already have a Bitget account, there is a link in the description below. This is probably one of the better exchanges to set up your grid trading strategy. And we covered this previously. We said that anywhere between the lows of about 10 to 12,000, or the ultimate target, and that $16,000 level, we would be laddering orders throughout this area over here, because when these prices start to sell off aggressively, you usually don't have a chance to even get your orders in. Most of the time, exchanges tend to shut down, at least in the previous cycles. And I wouldn't think that anything would be different in this cycle. In the stock markets, they call it circuit breakers. Essentially, when they pause or halt trading on the stock market to try and give people, a psychological chance to adjust and calm their nerves down on extreme sell-offs. We don't have, it's not a legal thing that happens in crypto, but it's their version of kind of a circuit breaker. I think that exchanges always say, what do they say, James? They usually say like closed for maintenance. Closed for maintenance. That's their version of a circuit breaker. And that means you won't be able to get onto your exchange to enter in your orders. So if you are wanting to be a buyer of Bitcoin, you'd be setting your orders between 16,000 and 10,000, laddering them down with 30 to 40 different grids. On Ethereum, you'd be looking at about $1,000 all the way down to about $700. But bear in mind, guys, there is no certainties in trading. Even if price starts to capitulate, it could literally swipe straight through those levels. I don't know how low it could go. We in a unique environment with the markets at the moment, and anything could happen. So use the link in the description below for Bitget. If you do want to join, you get a sign-up bonus over there. Okay, looking at this feed over here. So on Friday, we had more than 33 million puts traded, which is the highest single day of put volume since the data began to be collected around 30 years ago. And these are essentially investors that are trying to take out insurance, protecting against the downside. So remember, you get puts, which are essentially betting on lower prices. And that's an insurance claim. Here you have Jason also showing something similar. Full on crash mode, retail traders spend $18 billion buying put protection last week, a record. They're holding 46 billion worth of index futures net short, which is also a record. And leverage traders are betting on very, very bad things happening very soon. So the reason that I want to mention this is also because, as I said in the beginning of the stream, that oftentimes when the masses catch on, when retail catches on, that could mean that a bottom is very, very close. I'll never counter trade the trend. I'll always side with the trend until that changes back to the upside. But it is interesting, and at least a slight glimmer of hope that in the not so distant future, hopefully we do find some ultimate sort of bottom within the markets. Looking at Mac 10 over here, he says buying the dip in 2022 has the worst performance since the 1930s. And this is actually quite a scary picture, because if you look on the left-hand side here in the bottom, you have that box over there, which is in 2008. That is the VIX, which is the volatility index for the S&P 500. And anytime that there's an expansion of that, it's usually followed by a downside move within the actual S&P 500. And you can see that in terms of a fractal, if you will call it that, we kind of starting to cross above that 29.92 level on the VIX. And once you start to clear that level, expansion happens very, very quickly, and you go in line with the trend, right? So you have a downward move over here, VIX expands, and then you have a massive recession, sell-off and crash over there. And the same thing looks to be happening over here. As a fractal, it looks almost identical. And because the trend is down, I would definitely side with this being a possibility of something that may take place in the weeks to come. So looking at the actual S&P 500 over here, this is what I wanted to touch on. It is the what they call the kiss of death. And essentially the way that it works is you have a monthly chart set, and you put on that monthly chart a 21 exponential moving average. Now you can back test this, and you can look at how this played out in 1929 and 1932. The exact same thing happened. For the sake of time, I'm not going to go all the way back, just take my word for it. Go verify for yourself on your own trading view if you want. It happened again in 1969. It also happened in 2000 and 2001, and then in 2008. These are all the biggest crashes that we've ever had, and the only time that it was invalidated was in COVID, because that was a V-shaped recovery. So essentially, what the difference was over here is it didn't backtest in COVID. Price sold off all the way through, and then it immediately V-shaped out of there. So how does this kiss of death work? Essentially, what happens is with the 21 EMA, you put this on. Usually, price needs to make an all-time high. And on all those dates, there was an all-time high in the stock market at that point in time. Then price tends to come all the way back down, breaks below that. It pushes back up into the 21 EMA, and then you have your straight rejection off of that. That is referred to as the kiss of death, and ultimate confirmation. And this is the reason why I'm bringing this up for you right now, because this could be confirmed this week if price does not bounce. Hence the thumbnail for today is that basically bounce or die is the situation for crypto. Once you take out that low of the previous month over there, then the kiss of death has been confirmed, and you can see price is coming and trending towards that. So if I move it onto a weekly chart to give you a better perspective, essentially what you're watching is this low over here. And look at that, guys. I mean, we are literally right there. As soon as that gets taken out, then there's usually follow through to the downside. Now, I don't want to be the, like Dr. Doom over here, but according to this kiss of death, if it does happen and price tends to sell off after that break over there, there is usually a 50% move to the downside. So look at my target is only 10% away. The ultimate target that I was looking at is these key quarterlies from the pre-COVID levels over here, and going into the parabola that's been holding on the stock market, that would be another 15% down. If you start to go 50% down, I mean, I have to zoom this chart out a bit. So if there was a 50% move to the downside, let's get a bit more history over here. So let's say you take out that level and you go 50% down. Where would that take us? Terrible. That would be pretty much back to prices not seen since a little bit higher than that. Let's go around here. It's about since about 2015 levels. So you can see here is the parabola that has been holding since the early 90s. You got a couple of touch points over here. And my hope is that at least there would be some sort of a reaction off of this area, because you have a strong horizontal, which is meeting up with that parabolic trend over there. So very, very important week. Go and back test it. Just to repeat myself again, how it works. Monthly chart, 21 exponential moving average, goes from an all-time high, breaks down below the 21, pulls back into the 21 EMA on the monthly, rejects off that. And once you take out that previous low that was set, which is this one that we're right at the moment, then that is the kiss of death confirmation, and it gets sent straight back down. So very, very important. But with that being said, markets and mayhem, they're showing here that the market is the second most oversold that it's ever been per the New York Stock Exchange oscillator. And the first was the COVID crash. Just wow. And what I want to say to this is, look, with COVID, that was the biggest sell-off ever, according to this oscillator. But we had a different environment. We had quantitative easing that kicked in right after that, and that initiated a V-shaped recovery. And I don't know if something else like that is going to come. Nothing has been announced as of yet. But as it stands, just because something is oversold doesn't mean that you should automatically be a buyer. Yes, you can dollar cost average in, and you can come with a plan on buying support areas with your invalidations below. But you shouldn't just blindly buy something just because it's the most oversold that it's ever been. Same thing as an RSI. RSI down at 20 on a monthly chart can still track down to 15, and then down to 10, and then down to 0. It can keep going down, and it's not a sign of turning bullish or flipping bullish. So we've covered this already. Digital assets are transitory. So TED Talk shows here what he's going to have to say on Tuesday. I'll definitely be keeping an eye out on that, and it could be a big catalyst for what I can only see as more likely to be a negative move than a positive move to the upside. Okay, looking at the S&P 500 futures over here, you can see that this week has already opened on the futures trading chart over here. It's opened straight into this box. This was our first target where we said potential small reaction to the upside and then probable continuation to the downside. We've covered this plenty, so but not looking good. Straight strong downtrend, and it's probably going to continue for quite some time. What about the other charts? How did the NASDAQ close on yeah, you got on Friday? NASDAQ closed also straight into that box. And now it's a big question mark. What is going to happen today, guys? Are you going to bid this level? To be honest, if you do bid this level, you have an easy invalidation. So these are always good trades to take. I mean, you are counter trading the trend. You'd be looking to trade this as almost like a scalp, but it would be something like that. If you were looking to trade this, your invalidation is literally even a tick below that previous low, and you'd be looking to go long straight into resistance. I don't personally trade the NASDAQ. Rand does. If you're watching this, Rand, this is probably your trade setup. Put a stop loss this time. Okay, moving on to the DXY over here. DXY absolutely pumping. It almost hit that 114.85 target that I had set. I did expect a little bit of a pullback first before that, but you can't fade this thing. The DXY is super, super strong at the moment. What about the VIX over here? You can see the VIX has kicked on to the upside. So I showed you on that previous tweet, it's holding above that 28, 29 level. And this is usually where you can get rapid expansion to the upside. I have mentioned this before, but I'm going to do it again in case there is somebody that's new here. One thing that you can do to ensure that you know you're buying when fear is at its highest and capitulation has kicked in is you can take this chart here, the VIX, VIX, put it on a weekly chart. We only have a history since like 91 on this one in particular, but kind of mark out these important levels. So you have the 48.5 level and then mark out between 77 and 85. If the VIX, if you're sitting on cash and you have cash available, ready to buy the dip, and you see the VIX spike into these zones over here, this you can say with quite a high probability would likely mean that you are in extremely oversold levels, and at the very, very least, when this comes back down, there will be some sort of reaction within the stock market and crypto to the upside, giving you a chance at least on a bounce to make some amazing, amazing profits. Okay, moving on to the pound. So here's the pound. Look at let me quickly switch that. Look at that chart over there. Massive, massive push to the upside from the US dollar strength against the pound. I only pulled this chart up today since it's trending, so I haven't really looked into it too seriously, but let's have a look. I mean, this is, at least according to the history of this chart, I have since the 1980s. Amazing. That's pretty much the highest that it's been, I think. Is it spiked to all-time high levels? Let's quickly mark this one out. I know a lot of you that are watching are probably from Europe, so it's probably relevant for you. The live viewers are awake and in Europe, so let's look at that. Wow, guys. Spiked through, made a new all-time high. Yes, it's pulling back from this level, but looking at this, I would probably expect some sort of continuation from these zones. Very, very interesting. Very, very interesting. We'll keep an eye on this in the weeks to come. I'll chart this out a little bit better. Pullbacks would probably come down to this zone over here. Let's mark that out. About 82. Currently, it's at about. So I wonder if these are going to go into parity at about a 1-to-1 level. This is going to be interesting to watch. Okay, moving on. Have a look in the link in the description below, guys. If you're not already part of the Discord, get in the Discord. The Discord has plenty alpha, not only from myself but from a couple of other people as well. Click that link in the description below. Also, if you enjoy the short form content, please give this video a like, hit the bell notification, and make sure you subscribe. It's all that I ask for you. I'd really appreciate it. Okay, let's go on to the Bitcoin on the 3-day chart over here. You can see this is still holding our strong downtrend. And on Friday, I did warn you guys of what a bull trap would look like. And it didn't even look like bulls were strong enough to push price up to these levels. So kind of this picture continues, just a straight distribution, series of lower highs. You're now testing this zone over here. which is that $18,000 level. Multiple times you have lower and lower closes, and you can tell by just quickly switching this onto a line chart, not looking good. There's your June lows, which wicked a little bit lower than what we are now. But the more important thing is if you look at this close and you look at this close, these are all getting lower and lower with lower highs. It's not looking good. Expect a breakdown coming soon. Any spikes into these zones are short opportunities. You have to go short there. It's free money. I almost want to call it free money. No such thing as free money, but this is as close to free money as you get. If you see any spike like this back into these areas, especially if it doesn't manage to close there, and you can grab that with your stops a little bit higher. When price comes down, you can make a lot of money to the downside, guys. So keep an eye on that. That is Bitcoin on the 3-day chart. Another chart I haven't brought up for some time is the Gaussian channel. So if you do look at the Gaussian channel over here on Bitcoin, not only do you have it still red, you had the bull trap that was set over here. Look at how it pushed into the middle of that Gaussian channel, rejected off that area, failed to close any higher than that for multiple days, only had like one close there. Next day, straight back down off of the open. But also importantly is this key horizontal level, which was the 2017 all-time highs. Look at how many closes we've had there. And soon this Gaussian channel is going to start to also move down below that level. Like you can imagine, it's going to soon start to come like that. And that is not a good sign. This is going to be super, super strong resistance that gets formed within this zone. So we are in for a lot more downside, in my personal opinion. What about Ethereum? I think Ethereum flipped green. Okay, Ethereum did manage to flip green, but as you can see, it is slowly starting to turn red again. And same story, any spikes into these zones are shorting opportunities. I don't really foresee it getting above that, the middle of the Gaussian channel, which is $1,622, and continuing to trend down lower. So interesting level to watch. The only thing that I can say about Ethereum is that surprisingly, it has held up better in the sense that it hasn't come and it hasn't closed below those lows from June in the same way that Bitcoin has. Here is the ultimate swing low with the closes over here, still closing higher, but I don't know. We'll see. We'll track that. If you have been trading this and holding Ethereum, it could be a good time to start rotating into Bitcoin. So keep an eye out on that. Okay, Bitcoin on the Super Guppy indicator. Same thing over here, strengthening, expanding to the downside. What about Ethereum? Ethereum also gone red. And now you have this area that's going to probably act as resistance at $1,425. Looking at Bitcoin on the daily, bear in mind we do have the next bear moon that should arrive. I think it's tonight or tomorrow. But more importantly, forget the moons. You are stuck below all those important EMAs. The EMAs that I have on here is the EMA 9. I have the EMA 12, the EMA 24, and I have the EMA 34. These have all been historically phenomenal ones to use in governing the downtrend. And then you do have your RSI over here, which is kind of coming back, trending back down, at least with its moving average. And I did tell you guys, ultimately, I expect this yellow EMA to sweep the lows around 20 at the very, very least before bottom gets formed. So I'll be waiting patiently for that. Let's see, maybe we have 2 more weeks of downside and then we reach some sort of ultimate bottom. But I'm not willing to make that call, by the way. I'm not sure. I don't know what's going to happen. I take it week by week. 4-hour chart, you have your momentum oscillators are nearing the bottom. But as I've said before, that's not necessarily just a sign to automatically enter the market. You do have a distributive pattern over here, almost a bit of like a descending triangle. You're at the range lows at the moment. And how much longer can this hold? How many times have we tested this? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times. We've hit this area 10 times. Any spikes into the diagonal resistance, same as what I showed you on the 3-day chart, that is your shorting opportunity. You have to go short there. Okay, range, if you're viewing this as a range, so again, it depends on how you want to view the market and what your trading strategy is. Different people have different trading strategies. If you are viewing this as a range, you would want to see this deviation play out very, very soon, because the longer you sit here, have a look at these ones. You can see, look at this, how price didn't spend that long there on a 4-hour chart and spike back up. Over here, it literally just touched, bump and run. Here, it touched it and spiked back up. And now this one over here, look at how many closes we've had here. So I'm not really sure how long this whole range trading strategy is gonna hold up. You wanted to see price run from this level very, very quickly, but we do know things are ultimately being governed by the stock market at the moment. So what you can do for the sake of safety is rather wait for just a reclaim of what would be the mid-range. If price can start to get back above this zone over here, because you have your this trend line, which has been governing the 4-hour charts lower highs. Look at that, any spike into that, and it's come back down. You could wait for a break of this to consider getting bullish, but ultimately you want to clear this level, which is going to be a strong horizontal resistance. This level is coming in. You need price to get back above 20,400. If price gets above 20,400, then a potential pivot comes into play. And then who knows, maybe things turn super bullish and you start to take out those much higher levels where liquidity is lying at about $28,000. Personally, I don't see it right now, but if this level gets cleared, I'll potentially start to entertain that potential idea. Okay, Bitcoin on the 1-hour chart. Let me just switch this over here. You can see also the BBWP is starting to really contract just while we're on it on the 4-hour chart. As you know, anytime that you have that contraction, like look over here, these blueprints, that usually indicates that there is going to be volatility that is going to expand off of that area, and we're nearing that zone at the moment. It's direction neutral, meaning that it's not necessarily going to go to the upside. It could also be to the downside. So each time is different. Okay, what about the 1-hour chart over here? 1 hour, you do have your RSI, which is trying to come out of the bearish zone over here. So if this can start to get back above these levels, and at the same time you have this volatility squeezing to the downside, and as I mentioned, price breaks through that strong diagonal and clears above that 2017 high, that could be a short-term opportunity to go long. Again, as I said, I definitely lean more towards downside momentum, but this is what you'd be looking for if you are somebody that wants to take a scalp long. You want to clear all of this cluster of lower highs. You want to clear above the 2017 highs over here, and you want to see the volatility indicator expanding to the upside with the RSI tracking on up as well. So guys, I think that brings us to the end. I've covered just about everything. Today's stock market open is going to ultimately depict the week ahead that we have. If you are not yet signed up to ByBit, there is also a link in the description below. The reason that I bring this up is that in October, we are going to be having another trading competition that's coming up. And hopefully that's an opportunity for us to rather trade the upside. Maybe a bottom gets set in before then. So if you don't already have a link, use the link in the description below. You do get a sign-up bonus for both Bitget and ByBit. Make sure that you use my affiliation link for that bonus. I think they give you a special deal on Bitget. You're getting up to about $8,000 in trading bonuses. And more importantly, is the trading discount on your fees is 15% on Bitget. So if you're a US citizen, you'll be able to participate in that trading competition as well, because we're going to run them both simultaneously next to each other, the ByBit and the Bitget. Last competition, the US guys were complaining, saying they can't trade on ByBit, so that's why we've opened it up for you with Bitget. So guys, that brings me to the end. Smash the like button, subscribe button, and hit the bell notification, and I will see you all on the next video. Cheers for now.